Are you ready to stop settling for average returns? These 5 ETFs are outpacing the market, and they could change your financial future fast. In today's video, we'll explore some of the best exchange-traded funds, ETFs, that have consistently outperformed the market. Whether you're a beginner or a seasoned investor, these options are designed for long-term growth. Stick around to discover why number 5 stands out. This could be the game changer you're looking for. Let's start with number 1. SPDR S&P 500 ETF SPY. The SPDR S&P 500 ETF SPY is one of the most popular and well-known ETFs for long-term growth. It tracks the S&P 500 index, which includes 500 of the largest companies in the U.S. These companies come from many different industries like technology, healthcare, finance, and consumer goods. By investing in SPY, you get a piece of all these major industries, giving you a balanced investment spread across the whole U.S. economy. The S&P 500 has historically given an average return of about 10% per year, reflecting the steady growth of the U.S. stock market. SPY closely tracks this performance, which means you can benefit from the overall growth of the economy over time. For investors looking for a simple, reliable way to invest, SPY offers a low-cost option that has consistently shown positive returns for many years. One of the best things about SPY is its low fees. This allows you to keep more of your investment returns. It's also easy to buy and sell shares, making it a flexible choice for investors. SPY is perfect for long-term investors, especially those saving for retirement or just looking to grow their wealth over time. It's a straightforward way to invest without needing to pick individual stocks, reducing the risk of making poor investment choices. Big-name investors like Ray Dalio, the founder of Bridgewater Associates, also recommend SPY for their portfolios. Dalio is known for advising people to spread their investments across different types of assets, and he's often suggested broad market ETFs like SPY for those who want to save for the future. His advice shows that SPY is not just for beginners, but also a trusted option for experienced investors who want a simple, low-cost way to invest in the U.S. economy. At number 2, Vanguard Total Stock Market ETF, VTI. The Vanguard Total Stock Market ETF, VTI, is an excellent option for investors seeking broad exposure to the U.S. stock market. Unlike the SPDR S&P 500 ETF, SPY, which only includes the 500 largest companies, VTI covers large, medium, and small companies, offering a more comprehensive market view. This diversification helps reduce risk while enhancing potential returns. VTI lets you invest not just in major companies like Apple and Microsoft, but also in smaller ones with higher growth potential, though they come with more risk. This balance between stability and growth makes VTI appealing to many investors. Over time, VTI has outperformed many other investments, especially in strong market conditions. Its broad exposure helps it perform well in both good and bad times, making it a solid choice for long-term investors. VTI offers access to the growth of various sectors, including technology and healthcare. Wealth coach Tony Robbins often recommends VTI for long-term investing. He advocates for low-cost index funds like VTI, as they help build wealth while benefiting from the economy's growth with minimal effort. Up next, we have number 3. Invesco QQQ Trust, QQQ. If you're seeking higher growth potential and are willing to tolerate more risk, the Invesco QQQ Trust, QQQ, could be a great fit for your investment strategy. This exchange-traded fund, ETF, tracks the NASDAQ 100 index, which consists of the largest non-financial companies listed on the NASDAQ stock exchange. Some of the most prominent names in the world are part of this index, including tech giants like Apple, Microsoft, Amazon, and Tesla. The appeal of QQQ lies in its ability to offer exposure to the fast-growing tech sector, which has been a dominant force in driving market performance in recent years. As the tech industry continues to thrive, particularly in areas like artificial intelligence, cloud computing, and electric vehicles, QQQ has delivered impressive returns, often outperforming many other broad market ETFs. Its focus on high-growth companies has made it a favorite among investors looking to capitalize on the innovation and expansion of major tech firms. However, with the potential for higher returns comes increased volatility, QQQ tends to be more sensitive to market fluctuations compared to ETFs that track broader indexes. The price swings can be more dramatic, especially in times of economic uncertainty or market corrections. This means QQQ is better suited for investors who have a higher risk tolerance and a long-term outlook. Notably, influential figures like Elon Musk, the CEO of Tesla and SpaceX, have publicly expressed their support for investing in technology-heavy ETFs like QQQ. Musk, known for his focus on innovation and tech-driven companies, believes that these kinds of investments are key to capitalizing on the future growth of the economy. For investors who are willing to take on more risk in exchange for higher growth potential, QQQ offers a compelling option with significant upside, albeit with some volatility. Number 4. Vanguard Growth ETF, VUG. The Vanguard Growth ETF, VUG, is a popular exchange-traded fund that focuses on stocks with strong growth potential, primarily in sectors such as technology, healthcare, and consumer goods. This ETF targets large-cap companies with the potential to outpace the broader market in terms of growth. By investing in companies with high growth trajectories, VUG aims to provide investors with opportunities to earn substantial returns over time, particularly in periods of economic expansion. VUG has a proven track record of delivering solid returns, especially when the economy is thriving. By concentrating on high-growth companies, it offers the potential for significant gains, but it also comes with increased risk. These stocks tend to be more volatile, meaning their value can fluctuate more than that of more established conservative investments. If you're an investor willing to accept a higher level of risk in exchange for the possibility of greater rewards, VUG could be a great fit for your portfolio. Billionaire investor Mark Cuban, known for his success and ownership of the Dallas Mavericks, often advocates for investing in growth stocks like those found in VUG. Cuban highlights the importance of targeting companies that are disrupting industries or introducing innovative technologies, as they tend to offer superior growth potential. With its focus on high-growth opportunities, VUG aligns well with Cuban's investment philosophy, making it an appealing choice for investors seeking dynamic and lucrative options. Lastly, we have number 5 iShares, MSCI All-Country World Index ETF ACWI. The iShares MSCI All-Country World Index ETF ACWI gives you global exposure by tracking an index that includes stocks from both developed countries like the US and Europe, and emerging markets like China and India. This ETF offers a way to invest in the world's major economies and take advantage of growth outside the US. ACWI allows you to diversify your investments internationally, which can help you reduce risk by spreading your money across different countries. While it can be more volatile because of the different economic conditions around the world, it offers strong growth potential by tapping into global trends. A well-known person who uses a global diversification strategy similar to the iShares MSCI All-Country World Index ETF, ACWI, is Jeff Bezos. As the founder of Amazon and a prominent investor, Bezos has recognized the importance of global exposure through both Amazon's international expansion and his own personal investments. If you're looking to grow your wealth and invest smartly, these top 5 ETFs are definitely worth considering. Whether you're after steady growth with SPY, broad market exposure with VTI, or the fast-paced tech world through QQQ, there's an option for every investor. Make sure to hit that subscribe button so you don't miss out on more insights like this. And don't forget to check out our next video, Smart Money Moves to Make in Your 30s for Early Retirement. It's packed with strategies that could help you retire sooner than you think.